Well, welcome once again. It's the 2nd of May. Joe with you here. It's Thursday. Let's get into a market roundup. You guys know how this works. I'm going to break down the meaningful news of the day. Let's get into some technical analysis on the overall markets and some charts that we will be sharing with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you could see it was a little bit of, well, let me call it a push and pull. Take a look at the daily news here. The market push and pull continues because we've got some mixed earnings out there, along with some Fed policy concerns. We're seeing a little bit more inflation sticking around. I should say they refer to it as sticky inflation. There were some worries and concerns about stagflation. Powell quickly jumped on that, of course, as he should. Keeping the interest rates the way they are can take care of that, but cutting them seems a distant hope at this point, based on how strong we still are. Unemployment claims dropped today slightly, but it just shows that it adds to the concern of less Fed action or intervention. How do we finish the day? Dow, the S&P, and the Q's all up. The Q's up 1.5%. It's three stocks that did it: NVIDIA, Apple, and Amazon. Apple actually has news. It has its news announcement this afternoon or after the bell today. The Russell up just shy of 2%, but oil and gold just kind of took a back seat and a pause. Advanced decline line, 75% advancing, 21% declining, above below the 50-day moving average, 63 still below, and 37% above. So a couple things to take from this as we jump straight into the chart is these markets are still in a bearish trend and a bearish pattern. I just can't emphasize that enough. I've got a lot of traders that are a little bit concerned about the day-to-day and the movements of day-to-day action and gaps up and gap down and it moves higher. We cannot keep our eyes off of the focus of chart patterns. This is a beautiful bear rally from a breakdown. Look at this crossover we have on the 2050. The 50 is still holding on, and the reason being is because we're getting all sorts of these interesting candles, like this gap down with an intraday high that came all the way back up here. Today we have, and this is where it closed, folks. Today we have a gap up that decided to move all the way down and then come back to close a little bit higher. It's days like this push-pull is what I'm referring it to, that really doesn't give anybody any sort of direction. A lot of it's going to be based on worries and concerns when it comes not only to Fed policy, but also individual earnings. We are in the midst of earnings season with some very large companies about to announce that have already announced beating and missing, things of that nature. And that's why we're getting this push-pull, right? Here it is, two candles, push and pull. However, please do not take out of consideration the overall bear rally that is picturesquely perfect at this point. I'm still going to have to lean to the bear side. Of course, my outlook's not going to change. It's only been 2 days since I did this last, but that's kind of where we sit. Moving over to the Qs, it's the exact same thing. This one's a little bit more apparent as the action is a little bit further down from this sloping 20-day moving average. In fact, this 50-day is almost flat enough and almost rolling over. I could actually be a -3 in the Qs overall. This is a lot more tumultuous of an area since it is heavily based and heavily weighted on just a handful of stocks. Not much more we can take out of this than what we got out of the SPX. It is still a bearish pattern, and it looks like we're going to continue to kind of chop sideways from here or lower. So that's it for the charts. We didn't see much difference over the last few days, but let's take a look at the heat map. The Qs being up 1.5%. I'm just going to have to lay it out there, folks, is we have these stocks: NVIDIA, Amazon, Apple, and Google. Apple, once again, could change its tune pretty quick here, or it might continue higher based on its results. They're due out here imminently. But overall, when you get those 3 or 4 companies higher, the NASDAQ inevitably is also going to move higher. So I'm not going to put too much on it. Outside of that, mostly green, a little bit of brown, a couple of reds out, specifically when it comes to the sector they're in or specific news. But kind of a non-event day overall because of that push and pull action. So where I'm at, I'm exactly where I was on Tuesday. The slope, the 2050 slope, if that 50 was to slope over a little bit, that'd be great. But yesterday's action, today's action, they're kind of negating each other. I'm putting a little bit more emphasis there on Tuesday, as we confirmed a pretty good reversal signal on Monday at that crossover. So I'm still -2 for the weekly outlook, -2 for the monthly outlook. And folks, I would lower that monthly outlook if we actually did see that 50 start to slope. I know that we do have earnings, and earnings can change things, but in light of where the Fed sees this economy going, knowing that we're not getting anywhere near slowing, I don't think rate cuts are coming. And if the markets have priced those rate cuts in, well, there could be a little bit more downside coming. It's not saying it's a bad thing. It's just, hey, it's just sometimes when you got profits to take, maybe they should be taken. Let's go look at our potential trades here. Let's jump into our first bull. This is Eagle Mines Limited, a gold company. I just like the bull pullback on it. It did hesitate today. You guys saw that gold and oil both really didn't do much. It's kind of sitting back and letting these markets kind of wipe themselves out, or try to clear the slate and see where they want to go. But if there are any worries out there when it comes to the dollar or the Fed or rates, flight to safety would make sense. It's actually doing pretty good. I would place something kind of sideways to up, maybe target this around the 68 mark, maybe kind of a diagonal spread. I wouldn't get too aggressive in either direction here. I know this is kind of a trade that's outside of the norm, so if the markets struggle, we should see stuff like gold and flights to safety, oil continue higher, and that's pretty much why I would put a little bit more emphasis on this. But I would not get too directionally aggressive. Let's jump straight down to our bear. We took a look at Schlumberger last time. This time, here's why. Because we have Apple coming out right now. In fact, it's probably coming out as I'm talking. If it doesn't make it, this would be something to roll over in sympathy. I just like where it's at. Take a look at my box here. It's had a pretty good move down the last few days. It's only been yesterday and today where it's actually kind of recovering, but it is below a pretty significant support level there at about 397, 398. So I imagine if, with the decrease in volume, but I imagine if this does roll over, Apple comes out with bad news, we could probably play this in something more of a sympathetic move to the downside. Overall, folks, I think the thing that I would want to leave you with is these are speculative trades. These are trades that we don't necessarily have to take. I'm not rushing to get into anything here. The markets have been super choppy, but they are following a bearish pattern. But the gap up, the gap down, the move higher, I mean, this can be tumultuous to trading day to day. If you believe in the overall pattern and the outlook of the -2 that we have, then yeah, trades like Microsoft can be kind of cool with some bad news from Apple, so on and so forth. So you can get a little bit creative on that end. Overall, the markets remain in a bearish pattern below averages and support levels. Earnings will create volatility, but the overall chart should be our focus. Yes, we love NVIDIA. Yes, we love AI. Yes, we love everything that's hot right now. It doesn't make a difference, folks. If the numbers aren't coming in, and if this stock has exceeded a point to where profit taking can occur, it will. So we got to focus on the overall motion of the ocean before the specific stocks. It can be hard to differentiate between the two, especially with companies that are a lot larger that have impacts on the market. Just trust in your charts. The Fed does not seem to be concerned with inflation, but it acknowledges the reduction in a rate cut potential, meaning, hey, I'm glad we didn't cut because things are still moving higher. Unemployment or employment is high. We'll see the unemployment non-farm payrolls tomorrow, but the ADP was pretty much right in line. Earnings-wise, we've got Apple, Amgen, and Coinbase actually tonight. We're going to continue through the earnings season. We got a couple more tomorrow, but they pick right back up come Monday, so make sure you're always checking potential trades. I'm not sure where those came out today, folks, but jump on them, take a look, because Apple is a big enough company to where it actually could kind of skew where at least we open tomorrow. That's all I got, folks, for today. Thank you so much for joining me, and we'll talk to you next time. Bye, everybody.